This 3R trade wasn't special because it won. It was special because I followed my rules, even when price started chopping around my entry. In this video, I'm breaking down a backtest where market structure, supply demand, and execution lined up, and how sticking to the overall market structure made the difference. Let's rewind and start on the 15-minute chart. As we can see, we've recently just taken Asia high and turned bullish. We have a swing high here and a swing low. We can also see that after London session, we have a heavy retracement back into the leg, leaving multiple bearish fair value gaps. Now, instead of panicking at this pullback, I mark out a zone from the bottom of this working low all the way to the low of the 15-minute leg. That becomes my demand zone. Sometimes I think of it like a trampoline. If the trend is truly bullish, price should bounce from that area and not crash through it. So my bias stays bullish, but I need confirmation. If we play things out, price action moves into our zone and mitigates it. At this point, we drop down to the 1 minute to see if we can find confirmation of a reversal in order flow. As we play price out, we can see that sellers remain strong, pushing price further down into our demand zone. It's moments like these that I like to think of this being a big tug of war between buyers and sellers. Just because one side is pushing down hard doesn't mean that they won. There may be a point of exhaustion where buyers step in and take price the other way. What I'm waiting for is simple. I want to see supply get overrun by demand. Eventually, we're able to identify a small supply zone that creates a low right here. A few minutes later, buyers step in and aggressively break that key level that we were looking for, denoted by the green line. On the 1 minute, we can see the strong bullish candles, leaving bullish fair value gaps, indicating aggressive momentum. That's not random movement. That tells me buyers are taking control, and that's my confirmation. With that said, there is a red folder event not too far away, so we want to be mindful and observe price action at the time of release as well as 5 to 7 minutes after to see if there's any residual volatility that needs to shake out first. Looking at the 5 minute and advancing our chart forward, we can see that the news has passed and created an aggressive move up. That doesn't mean price is going to run away. In fact, it has a better reason to come down and collect more orders before realigning with the overall 15-minute market structure. At this point, I'm convinced that volatility has passed and I'm going to look for an entry. I'm targeting this sell to buy candle right here for my entry. Entry goes at the top of the candle and stops go just below the swing low. I set my take profit just below the 15-minute swing high as I expect sellers to defend it given the aggressive momentum that initiated the move down in the first place. I have defined my risk, I have a logical structure, and I'm not guessing. Price tags me in and immediately starts chopping around my entry. This is where most traders panic, but structure hasn't broken, so I have no reason to change my plans, and I stay patient. It's moments like this where I might even go for a walk just to get away from the screen and prevent myself from doing anything I regret later. Eventually, we push higher and hit our first partial take profit area. At this point, I either can take my partials and or move my stops to break even so that I can remove all risk off the table. At this point, I'd be playing with house money. Price continues grinding higher and eventually reaches my final take profit right near the supply zone that caused the aggressive drop after London session close. This results in a 3.4 trade. The lesson isn't that this was a winner. The lesson is this. When price chopped around my entry, I didn't interfere and I didn't panic. I didn't second guess and I didn't move my stops emotionally. I followed my structure and I followed my plan. Sometimes probabilities work in your favor and sometimes they don't. But consistency only comes from executing the same way every time. If trade breakdowns like this help you see the charts more clearly, check out this other backtesting video review right here. And just as a reminder, this isn't financial advice and I'm certainly not a guru. I'm documenting my journey towards consistency using market structure, supply demand, and price action analysis. If you're building your skills in a disciplined way, then subscribe and let's keep sharpening our edge together. I'll see you in the next one.